Good morning, retail traders. I'm Washboard Jim with a Sneaky Snake trading strategy, and I want to show you how we looked at yesterday's trade on the SPX, and this can apply to many other trades, and we're going to go ahead and pull that right up. So this is the SPX. At first, at open, we had a real big knife. Well, you already knew where I felt in the market already just by the weekly time frame. If you go up to the weekly, let me find it here. We had three black crows with a bullish harmony. So I pretty much bullish into yesterday. And then we had that pullback, and it was just the best setup to get into this trade. And we did hit my resistance line that I did. We came real close to hitting my resistance line that I did call out, which was the bottom of this here weekly candlestick. And we're going to go ahead and draw that trend line in there right now. Price line right there on the bottom of that wick. You can see it right there. And we nailed that. Weekly, I do the wicks, and I do also do the bodies of the candle, because that's a whole week we're talking about, not just a one day fluke or something. So I add them wicks when I'm looking for resistance and support levels only on the weekly time frame, monthly, yearly, so on. So we had three black crows with a harmonic candlestick pattern, and I was pretty much bullish, sitting off of the 21 EMA. We bounced right off that 21 EMA, and as long as we stay on that 21 EMA, we're still good in the trade. We pulled back and hit it. I might run it up, start to invest big again, but I think maybe the third time we come down, it might not be that good. So we got to try to break this resistance and gain respect off 51.10.27. So this was yesterday's trade. This is done on the 1 minute time frame. Let's go ahead and see if we can get a little bit more here. 2 day, 5 day, 1 minute. There we go. We had a big knife into close yesterday, which was more or less after the Pow Pow speech. And it consolidated back right at that low price. So when we came out of the gate, we popped up. And I noticed that. And I said, okay, I'm going to catch this knife. So we kept pulling on back, and we created what you call almost an expansion pattern on the downside. And you just draw that in here, or you could draw in the snake, one or the other. Let's draw in the snake. But this is about like that right there. So if you can count to three, you can trade with me. And that's what this is the strategy that works. So I take my ovals, and I go to counting to three. 1, 2, and then 3. We had that breakout. Okay. So it created an inverse head and shoulders. We already had the pullback here, then we got the head, and then we had the pullback, the breakout, which we had the one body candle sticking outside of the trend line from the 1, 2, 3. And then it retest, created a right shoulder right there, and then went ahead and broke on out, and then came back the second time and had that second retest. Then I know we were gold when we come into that trade. By this time I already bought into here, and I added on to here. And then we went ahead and run on up for the rest of the day. We came back and touched that shoulder line one more time for another entry. So you had 3 chances to get in on this head and shoulders. This is an inverse head and shoulders, which is a reversal pattern when you're in a bull market. I'm going to pull up the images here, and you can see all the inverse head and shoulders that show a reversal to the upside. Inverse, it's a chart pattern seen when the security price falls and rises 3 times to form a 3 consecutive thoughts, the second of which is the deepest. Then you got the head, and you got a shoulder line. So yes, inverse head and shoulders, man, I love trading this chart pattern. I see more of it than I see of probably anything else. And I'm always looking for it when I'm catching a knife. So we had the knife. I spotted the head and shoulders and called it out, took the trade. run it up, scalped it to the 200 SMA, got out of it, came back down again, added on, and then boom, we ran all the way up. Now we had an extension. We have the inverse head and shoulders, and then we had 3 white soldiers. Now these 3 white soldiers came in on the 10-minute time frame. That's an indicator that we could be in for more of an extension of a bull run. They always consolidate right here, and I always call that support right off that first soldier, the 3rd soldier. And she came back and she retested that 3rd soldier support line. And I told the room, I said, hey, we got 3 white soldiers. We could be in for an extension here, but we're going to pull back to this first soldier, and that's your entry. Don't chase it. She came back, and then she went ahead and run on out and broke out and had that resistance level of the 1, 2, 3 expansion pattern, and we traded that thing on the way up. So that's the SPX, and that's what to look for when you're catching knives. You've got the 1-minute time frame. You've got the snake, breakout, pull back, boom. Snake, breakout, pull back, boom on the SPX. So I wish everybody a great day. Retail traders. This is the sneaky snake trading strategy where I talk about chart patterns, moving averages, and being the now. And today we're going to we talked about the 3 white soldiers for an extension and the inverse head and shoulders for the idea to take the trade. And have a great day. Boom, boom. Let's kill it. Remember, we're on that 21 EMA. As long as we're above it, we're still bullish. If we're below it, we could be in for some more trouble. Have a great day.